What's up, guys? This is Joe with Schematic Solutions. And today we're going to be talking about how to put together your trading plan. More so not how to, more so um I would say what a trading plan consists of, what needs to be inside of a trading plan. For the most part, obviously, there's going to be stuff that's not on this list that you may put into your trading plan. There may be stuff on this list that you may not put into your trading plan. Um, but ideally, in my opinion, this is typically what's needed in a trading plan. So we have a little itinerary. First things first, we're going to talk about what we're going to talk about. Ultimately, we have our style of trading. We want there to be risk management and risk reward goals. We want to understand what assets we're going to be trading. We want to understand whatever concept or strategy confirmations we're going to be using. We also would like rules. And these set of rules are more so going to be to really guide us to properly utilize the trading plan in general. And then last but not least, we have our actual cheat sheet. So I would recommend to have a plus or minus cheat sheet. It could be in depth, it could be simplified, just something to where you can peek over sometimes and check it out if you need to. So that's the itinerary of this call. It'll be nice and quick. Just gonna run through this, and yeah, so let's get in. So first things first, style of trading. And this is one of the most important parts is, are you going to be a position trader? Are you going to be taking trades mainly based off higher time frame? And there can be a multitude of factors that determine what type of trader you are. So like if you are working all the time, you're definitely not going to want to be a scalper because you won't have the time to be on the charts 25/8. Now, if you have all the time in the world, you don't have much going on, then it might make sense for you to scout. So ideally, the position trading, you're mainly going to be utilizing the monthly through the daily. Obviously, you would be scaling down, but for your directional bias, this is really what you're going to be utilizing. Now, as a swing trader, you're going to be utilizing mainly the daily through the 1 hour. Just as far as your directional bias, once again, obviously we can scale all the way down into the 1 second sometimes to really get those super tight entries. And last but not least, or sorry, not last but not least, we have those swing traders. And then last but not least, we do have the scalp trading. And the scalpers, I would say their directional bias comes from the 1 hour through the 1 second. And it's really just lower time frame, not really playing any too many long time frame moves. So that's first things first. Style of trading. What are you? Me personally, I consider myself a swing trade scalper. More so a swing trader than a scalper. This is what I do full time. I recently have thought about trying to position trade. I've had literally one trade. We were just talking about it this morning in you that I've been in for a little over 180 days, and this has been my longest position. But yeah, so that's that ultimately. Once you understand what type of trader you're typically going to be looking to do, trading you're typically going to be looking to do, we're then going to talk about some risk management. You want to understand that this will really make or break your trading. So keep in mind, if you're not in the game, how can you score? So with that being said, capital preservation outweighs capital growth. I'm going to repeat that one more time, family. Capital preservation outweighs capital growth. So we should always be more emphasized on protecting our capital than just risking it trying to grow our capital. So with that being said, I personally only risk 0.25%. Now, some on the team risk anywhere from 0.25% to 2%, just depending on their max account size, obviously. And then as far as targets, 1 to 3 minimum. If you take 10 trades, you have to win 3 to be profitable out of 1 to 3. So depending on your win rate, depending on how confident you are, you can decide what targets you'd like, what risk you're going to consistently use. And this will really be the biggest asset of your trading plan. This will be one of the most important parts, because as we're going to go over inside concepts or strategy, any strategy can work. Break and retest can work with proper risk management and risk reward. I personally have a friend who passed FTMO simply break and retest. So with that being said, this is really the big deal of your trading plan to start off with: your risk reward, your how much you're risking per trade. Because if you're over leveraged, then ideally you're most likely going to just blow the account. So now getting into, if you're looking at 1 to 5s, minimums, bare minimum 1 to 5, if you take 10 trades, you only have to win 2 trades in order to be profitable. If you're looking for that 1 to 10, out of 10 trades, you only need 1 trade in order to be profitable. So, well, not be profitable, but break even. But you guys know what I'm saying. So now with that being said, imagine you only taking 1 to 10s and you take 2 wins. Obviously, depending on what you're risking, either way, you're up. Just depending on what you're risking, you're up a little bit more, up a little less, whatever the case may be. And this is what I focus on most at the beginning, because once again, your risk to reward is going to save you, and save you in bad and good scenarios. Because let's say you take back to back losses, like we went over on the last call, 1, 2, 3, 4, 5 losses. A simple 1 to 10 can make up all that and more. So now give me 1 second. All right, my bad. So next, our assets, right? We want to understand, what are we trading? Now, here's the thing. I personally feel I'm more of a, I guess, like setup specialist, meaning I specialize in my setup, in my specific confirmations that I'm looking for. Now, there's other people who consider themselves a pair specialist, meaning they specialize on a certain asset. I've done both. For me, since I pay more attention to the higher time frame than the lower time frame, I may not have a trade every single day on every single asset or on a single asset. But if I'm trading every single asset, I can at least find maybe 1 trade every 1 to 2 days, paying attention to the higher time frame, not just the lower time frame. So we're keeping that in confluence. So with that being said, ultimately, you want to understand if you want to trade 1 asset or if you want to trade all of them. I'll just put an A for all of them. Now, either way, you want to understand, are you going to be trading majors, which typically have less spread? Are you going to be trading minors? Are you going to be trading exotics? What time are you going to be trading? Once again, are you trading everything or only a couple of pairs? Do you want volatility or do you want slow moving pairs? Are you looking to trade something like the indices, or are you looking to trade something like Chef Jappy or something like that? And last but not least, do you pay attention to comparative analysis? And this makes sense, or this has to go inside assets, because if you're only looking to trade 1 asset, realistically, there's other assets that compare, such as NCAD and ACAD, stuff like that, to where if you're trading 1, you could technically be looking at 2 assets. If you're trading all the assets, you could understand comparative analysis and figure out which asset out of those 1, 2, or 3 that you'd rather take. So these are all questions you really want to ask yourself. Once again, I personally trade every single asset. If I were to kind of just open up my watch list, come over to all, and I have every single asset with 3 different brokers typically. And yeah, this ensures that if I don't have something on EU, higher time frame for today, there could be something on ACAD, whatever the case may be. once you identified or once you understand what assets you want to be trading, then we could talk about concepts and strategies. So just keep in mind, every single concept, every single strategy will work with a proper risk reward and risk management. You can literally be flipping a coin. You have a 50-50 chance. With the proper risk management and proper risk reward, you will be profitable. So now simply write out your checklist. You can do this both a simplified checklist and an extreme in-depth version as well. I personally did both just because I felt my extreme in-depth version is great for when I'm learning, when I'm back testing, when I'm on the charts, really kind of just having the time. But then my simplified version is something to where I have with me if I'm just running through everything quick. Now, my personal most important confirmations, as you guys already know: structure, this gives us our directional bias; liquidity, this gives us some type of target; and then supply and demand, this allows us to know where we're looking to get into the market. And last but not least, we do look for lower time frame Wyckoff schematics, higher time frame Wyckoff schematics as well. But in specific, when we typically go through these simplified confirmations, we specify the lower time frame Wyckoff, but in all reality, it's just the first 3 steps on the lower time frame. Pretty simple. Now that we've knocked out our concept strategy, whatever strategy you're going to use, whether it's smart money concepts, whether it's Wyckoff, whether it's whatever the case may be, a break and retest, whether it's indicators, you then want to put together some rules. Now, risk management and risk reward, in my opinion, are one of the most important parts of your trading plan. I would say your rules are equally, if not more important than risk management and risk reward. I would say equally. I would say they're equally important. Now, the reason why is because your rules are going to really allow you, or like show you how to properly use your trading plan. And your rules are going to be tweaked every once in a while, depending on the market, because the market's not static. The market's always dynamic. So you want to be dynamic with the market as well. So with that being said, you want to have rules for your entries. You want to have rules for how you're exactly going to manage your trades. I'm taking a certain percentage at a certain risk reward, or whatever the case may be. You want to have rules on when you're going to close out trades without reservation or hesitation. You want to have rules on when you're going to wait for a limit or wait for a lower time frame schematic in your entry area, whatever the case may be. You want to have rules for your max daily and weekly loss, a daily profit target rule, maybe some rules on if you're able to counter trend, pro trend trade, rules on if you're able to hedge, and even maybe some rules on like the number of daily setups. So these are just some rules that I have, might not be all the rules, but ideally you can definitely add some rules to this. And this is really going to kind of be like this is what holds everything in. So like, this is all your trading plan. And your rules are on the outside holding everything in. It's a bad little analogy. I couldn't think of anything. But ultimately think of it like a seed. The inside is all the valuable stuff, but nobody talks about how valuable the shell is that doesn't allow all the bad stuff to get in. And your rules are this shell. Now, once we have our rules, we can really throw together a little cheat sheet. This could be your confirmations. This could be your risk percentage, minimum R, your rules, ideal trade model drawn out. And this is something that you can just put on the wall in front of you, whatever the case may be. Like I said, down here, you can write out a simplified checklist, a little cheat sheet. And this is an example of a little cheat sheet. This is an example. So first things first, structure. If we're in an uptrend, I have my rules out. Okay, I'm going to identify my high. I'm going to identify the high before it. And the lowest point in between is what's maintaining that bullish structure. If it's in a downtrend, it's going to be the exact opposite. Number two, I need to find the banks, find the point of interest. This is going to be an engulfing candlestick pattern, last push down before the move up, or a Wyckoff schematic. Now we have our extreme and we have our break of structure point of interest. Our extreme is for an uptrend. It's going to be the point of interest where the bullish movement is being maintained. So the bullish trend is being maintained here. So our extreme is going to be right down here. Our break of structure point of interest is going to be what caused the high. So this is our high. If there was something inside of here that caused the high, that would be our break of structure point of interest. But as we can see, we only have this one point of interest. So we have our structure. We have our point of interest that we're going to be looking at, 50 and or 80% of this. Now, last but not least, well, not last but not least, we still have one more, but where's the money? Where's the money? We're looking for equal highs, equal lows, single highs, single lows, trend lines, overall opinions in the market. And we could agree we have liquidity right up here above this single high. So this is where we're going to be looking to take our first partials, first targets. Now, once we've identified all of that, then we can wait for prices to come down on the lower time frame, be in or near our point of interest, give us 3 drives, 1 drive, 2 drive, 3 drives minimum, and a break of structure. Once we get that minimum 3 drives and a break of structure, we can then look for entries from this last drive, 50 and 80%, to continue taking her up to the new high, obviously. And that's a basic breakdown of how to put together a trading plan, what should be inside of the trading plan. And keep in mind, you may have stuff that I may not have brought up that you want to throw into your trading plan, and that's perfectly fine. There may be a couple things on here that you don't need on your trading plan. Once again, that's perfectly fine. But I hope you guys got some value from this. If you guys do have any questions, any videos in specific that you guys would like for me to drop, feel free to either drop them in the comments, drop them in the Discord, and I will talk to you guys soon. Have an amazing day, guys.